Hey everyone, welcome back. Ever think about dipping your toes into healthcare investing in India?
But the whole thing just feels like a jungle of jargon.
Right. Today,
Diving into that world.
yeah,
Hmm.
specifically looking at the Nippon India Pharma Fund,
With a little help from the folks at SOS Fin,
SOS, Finwell.
yeah, they really focus on making investing less intimidating, right?
Yeah, absolutely.
They've built this report to guide anyone who's interested in this fund but doesn't necessarily speak, you know, finance fluently.
Right on. So they want to make sure you have the info to decide if it's the right move for you.
Huh.
So, first things first. What exactly is this Nippon India Pharma Fund? It's what's called an open-ended equity mutual fund.
Now, I know that sounds like a mouthful,
It does.
but it's simpler than it sounds.
Right.
Basically, imagine a basket carefully filled with stocks, mainly from companies in the healthcare and pharmaceutical space in India. Open-ended just means you can hop in or out, buy or sell units whenever you like.
So no getting locked into anything for ages.
Yeah,
And the goal here is long-term growth, yeah.
you got it. The fund's objective is all about capital appreciation, which means they're aiming to grow your money over time, not just hand out small dividends every quarter.
Oh, interesting.
Think of it as like them trying to bake a really valuable pie instead of just giving you a few slices right now.
I like pie. And a growing pie sounds even better. Now, the report mentions the fund has seen returns of about 21.49% since it started.
Since inception, yeah.
That's got to be exciting for investors.
It's definitely a healthy number. Of course, past performance isn't a crystal ball,
Right.
but it does give us a glimpse into how the fund has handled different market, moods.
Yeah, yeah.
And 21.49% suggests they've been navigating things pretty well.
That's putting it mildly.
Yeah.
And speaking of impressive numbers, the fund is managing a massive 8,769 crore.
Right.
Like, that's not just pocket change. That's a whole lot of trust from investors.
Exactly. That figure, what we call assets under management or AUM, speaks volumes. It shows you tons of other investors are putting their faith and their money in this fund manager's strategy and the potential of India's healthcare scene.
Yeah.
But as with any investment, it's not all sunshine and rainbows, right? There's always risk involved.
True that. And SOS Fin, well, doesn't shy away from that. They slap a very high risk rating on this fund.
Which,
I'm not gonna lie, that sounds a little intimidating.
right, I get that. It's important to acknowledge the risk, but also to understand it.
Okay.
This rating just means that while the potential for those impressive returns is there, your investment's value could go up and down like a roller coaster.
Okay.
That's just the name of the game in a dynamic field like healthcare.
Makes sense. High risk, high reward, as they say.
Oh.
But hey, who's the captain steering this ship through the choppy waters of the market?
That would be Silesh Rajban, and he's definitely not a rookie. With over 18 years of experience, particularly in healthcare and pharmaceuticals, he brings a wealth of knowledge to the table.
Okay, so we've got a seasoned pro at the helm, which is reassuring. Now let's talk turkey for a second. What are the practical details someone needs to know if they're thinking, all right, I'm interested, what's next?
Let's get down to the nuts and bolts.
Love it. Lay it on me.
So the minimum investment to get started is $5,000.
Okay.
But hey, if that sounds like a big leap, you can also ease in with a systematic investment plan or CSI.
SIP. Hooray. But seriously, for those of us who aren't fluent in finance, what's an SIP?
Think of it like a subscription to investing, okay? Instead of dropping a lump sum all at once, you invest smaller amounts regularly, say €100 every month.
Okay.
It's less daunting and can help you ride out those market ups and downs more smoothly.
So it's kind of like dipping your toes in the water before diving head first.
Precisely. Now imagine things are going swimmingly, but then life throws you a curveball and you need to access your money within 30 days of investing.
Oh, that's never fun.
No, it's not ideal. In that scenario, there's a 1% exit load. It's like a little nudge from the fund to encourage a long-term approach rather than quick in-and-out moves.
That's fair. They want you to be in it for the long haul.
Exactly. Think marathon, not a sprint.
Got it. Now, there's one more term in the report I wanted to unpack. The expense ratio. What's that all about, and why should people care?
Good catch. The expense ratio is basically the cost of running the whole shebang. Managing the fund, doing research, paying the fund manager, all that jazz. It usually hovers around 1.8% for this particular fund.
And that 1.80% comes out of my returns, right?
Exactly. Think of it as a small fee for their expertise.
Makes sense. You get what you pay for. Okay, so we've got a good handle on the basics, but I'm curious. Who exactly is this fund right for?
That's the million-dollar question, right? Well, based on everything we've discussed, this fund seems ideal for someone who's comfortable with some risk.
I know.
Someone who understands that their investment might go down before it goes up?
So not for the faint of heart.
Definitely not. You've got to have a strong stomach for those market swings.
Yeah.
But just as importantly, you should genuinely believe in the long-term potential of healthcare in India.
Yeah.
Because if you're not passionate about the sector, it'd be easy to jump ship at the first sign of trouble.
Totally.
You've got to weather the storm to enjoy the sunshine.
I love that analogy. Okay, so we've established that this is for someone who's in it for the long game.
Uh-huh.
How long are we talking exactly?
Ideally, an investment horizon of at least 3 years, but the longer, the better.
Okay.
Rome wasn't built in a day, and neither are impressive returns.
True words. Speaking of which, the report mentions a couple of other healthcare funds, SBI Healthcare Fund and ICICI Prudential Pharma Fund.
Right.
Are those worth exploring too?
Absolutely. It's always a smart move to compare different funds, check out their track records, risk levels, all that good stuff.
Yeah.
Diversifying within a sector can be a savvy strategy.
So don't put all your eggs in one basket.
Exactly. Now let's zoom out for a second and connect all of this to the bigger picture.
Ooh, I love it when you do that. Lay it on me. What's the key takeaway here?
India's healthcare sector is on an upward trajectory.
Okay.
It's a rapidly growing population with increasing healthcare needs,
Yeah.
and that's a trend that's only going to become more pronounced in the coming years.
So investing in this sector is almost like investing in India's future.
Precisely. And that's the message SOS Finwell is driving home. They want to give people the tools to be a part of this exciting growth story.
And they're doing a fantastic job of making investing less scary and more approachable.
That's the dream. Now, before we wrap up this part of our deep dive,
Yes.
I want to leave you with something to ponder.
Hit me with your best shot.
We've been chatting about the incredible growth potential within India's healthcare landscape, but let's widen the lens for a moment.
Okay.
Given that the entire world is grappling with increasing healthcare needs,
Right.
thanks to factors like aging populations and the rise of chronic diseases, how do you think this global trend might influence your investment decisions in the years to come? Food for thought.
Wow, that's a big one. The world as a giant healthcare market is mind-boggling. Thanks for that thought-provoking question. And a huge thank you to SOS Finwell for this insightful report. You guys are rock stars. Listeners, if you want to explore the Nippon India Pharma Fund further or pick SOS Finwell's brains for some personalized guidance, they're just a click away. All the info will be in the show notes.
And remember, folks, investing always comes with a degree of risk.
Of course.
Make sure you do your homework, chat with a financial whiz if needed,
Yeah.
and make sure any decisions you make align with your own financial goals and comfort level.
Oh, so-
Don't just take our word for it.
Yeah.
Do your research.
Couldn't have said it better myself. Now let's take a quick breather, but don't go anywhere. We'll be right back to delve even deeper into the wild world of pharmaceuticals and finance after a short break.
Stay tuned. Don't forget, this is just part 1 of our 3-part series, and you won't want to miss the rest.
And as always, a friendly reminder that mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
And we're back. Where were we? Ah, yes, pondering the future of healthcare investments on a global scale.
Right.
It's a pretty fascinating
Yeah,
and potentially lucrative thing to consider.
no kidding. But before we go full-on global, let's make sure we've tied up any loose ends about the Nippon India Pharma Fund itself.
Yeah.
We've talked about the potential rewards.
Sure.
But what about the flip side? What are some of the risks specific to this particular fund?
That's a great question, and it's where doing your due diligence really pays off
Yeah.
when it comes to this fund.
Yeah.
Some key things to consider are regulatory changes in the pharmaceutical industry, potential fluctuations in currency exchange rates,
Yeah.
and of course the inherent ups and downs of the stock market, especially within a specific sector like healthcare.
Right, because even though the long-term trend might be positive, there could still be bumps along the way.
Exactly. It's crucial to remember that this fund focuses specifically on India.
Yeah.
That means your investment is also subject to the economic and political landscape of that particular country.
So it's about looking beyond just the healthcare sector itself and understanding the broader context.
Right.
It's all connected.
100%. Another thing to consider is the fund's portfolio concentration.
Okay.
While it invests in a variety of companies, it might have a higher percentage of assets in a handful of larger players.
So if something were to happen to one of those big companies, it could have a bigger ripple effect on the fund's overall performance.
You got it. That's why diversification is key, even within a thematic fund like this.
This is super helpful to know. SOS Finwell does a great job of laying out all these factors in the report.
Yes.
So if you're really considering this fund, definitely give it a read. They break it down in a way that's easy to understand, even if you're not a financial expert.
Absolutely. Knowledge is power,
Okay.
especially when it comes to investing your hard-earned money.
Couldn't agree more. Okay, so let's say someone has listened to all of this, weighed the risks and potential rewards, and decided they're ready to take the plunge.
Okay.
What's their next step? How do they actually invest in the Nippon India Pharma Fund?
That's where things get really practical.
Okay,
There are actually a few different ways to invest, and SOS Finwell outlines those in their report too.
great.
You can go directly through the fund house itself,
Okay,
which usually involves filling out some paperwork.
right.
Or if you prefer the convenience of digital platforms, you can invest through online brokerage accounts or even some mobile apps.
Oh, wow.
They've made it pretty user-friendly these days.
That's good to know. No more mountains of paperwork.
Right. Well, yeah,
Technology to the rescue, right?
exactly. It's all about finding what works best for you and your comfort level.
Right.
And of course, before making any investment decisions,
Yeah.
it's always a good idea to consult with a financial advisor.
All right, they can help you figure out if it aligns with your overall financial goals and risk tolerance.
Precisely. Now, while we've been laser focused on the Nippon India Pharma Fund, I think it's worth mentioning that SOS Fin also offers a bunch of other resources for people who are interested in learning more about investing in general.
Yeah, they're like a one-stop shop for all things investing. I love that they're so committed to financial literacy.
Me too. They have
Uh-huh.
articles, webinars, even workshops,
Wow,
all designed to empower individuals to make informed financial decisions.
that's great.
They believe everyone should have access to this kind of knowledge, regardless of their background or experience level.
It's like they're on a mission to
Uh-huh.
demystify the world of finance. Now, for those who might be thinking, okay, the Nippon India Pharma Fund sounds interesting, but what are my other options within the Indian healthcare space?
Right.
What would you say? Are there other avenues they could explore?
You bet. India's healthcare sector is vast and diverse, and there are numerous ways to gain exposure.
Okay.
Aside from this specific fund, you could consider investing in individual pharmaceutical companies listed on the Indian stock exchanges.
Interesting.
Of course, that requires a bit more research and a higher risk appetite.
Yeah.
Another option could be exchange-traded funds, or ETFs,
Okay.
that focus on the healthcare sector.
Okay.
They offer more diversification than individual stocks, but still provide targeted exposure.
It's like choosing your own adventure, but for your investment portfolio.
I like that. It's all about finding the path that aligns best with your individual goals and risk tolerance.
Right.
And hey, if you're feeling adventurous, you could even explore venture capital or private equity investments in healthcare startups.
Oh,
But that's a whole other deep dive for another time.
you're speaking my language. I'm always up for exploring new investment frontiers.
Right.
But let's not get ahead of ourselves.
Yeah.
We want to make sure our listeners are comfortable with the basics before we throw them in the deep end of venture capital.
Fair enough. But it's good to know there are options out there for every type of investor, from the more cautious to the more adventurous.
Absolutely. Variety is the spice of life and of investing, it seems. Now, before we move on,
Okay.
I want to circle back to something you mentioned earlier about the importance of doing your due diligence.
Right.
What are some key things listeners should be looking for when researching different investment options?
Fantastic question. When evaluating any investment, whether it's a mutual fund, an individual stock,
Yeah.
or anything else,
Okay.
there are a few crucial factors to consider.
Okay.
Firstly, understand the investment's objective and strategy.
Okay.
What are they aiming to achieve?
Right.
And how do they plan to get there? Secondly, delve into the historical performance.
Okay.
While past returns aren't guarantees of future results,
Right.
they can provide insights into how the investment has weathered different market conditions.
So don't just look at the shiny numbers, understand the story behind them.
Exactly. And speaking of stories, pay attention to the management team or fund managers.
Okay.
Who's at the helm? What's their track record? Do they have a solid reputation and experience in the field?
It's like choosing a captain for your financial ship.
Right.
You want someone who knows how to navigate those choppy waters.
Precisely. Don't forget to factor in the fees and expenses associated with the investment.
Yeah.
Those costs can eat into your returns over time.
Death by 1,000 paper cuts. It's easy to overlook those smaller expenses, but they can definitely add up.
You got it. And finally, but perhaps most importantly, consider the risk involved.
Right.
What are the potential downsides?
Yeah.
How comfortable are you with the possibility of losing some or all of your investment?
Risk tolerance is so personal.
It is.
There's no right or wrong answer. It's all about what you're comfortable with.
Absolutely. Investing shouldn't keep you up at night. It's
Right.
about finding opportunities that align with your goals, your risk appetite, and your overall financial plan.
Beautifully said.
Uh,
Now, I know we've covered a ton of information about the Nippon India Pharma Fund and investing in Indian healthcare in general,
yeah.
but I have a feeling our listeners might still have some burning questions.
Right.
Luckily, we have one more segment to go in our deep dive,
We do.
where we'll be answering some of your most pressing questions about this fascinating investment opportunity.
Stay tuned. We'll be right back after a quick break.
And we're back for the third and final part of our deep dive into the Nippon India Pharma Fund. I hope you've got your thinking caps on because I know I've got questions and I bet you do too.
Fire away. We've laid the groundwork now. Let's get into those nitty-gritty queries that might be swirling around your head.
Okay, so let's say someone is hearing all this and thinking, this sounds promising, but how does this fund actually make money for me? What's the mechanism there?
Great question. Remember how we talked about capital appreciation?
Yeah.
Well, that's the name of the game here. As the pharmaceutical companies held within this fund grow and their stock value increases, so does the value of your investment in the fund.
So it's like riding the wave of their success.
Exactly. And on top of that, some companies might pay out dividends, which the fund can distribute to investors. So there are a couple of ways your money can potentially multiply.
Got it. Now, I know we touched on this earlier, but I think it's worth reiterating. How does this fund, which focuses specifically on India, play into the whole global healthcare investment landscape?
That's a really insightful question. While the fund is India-centric, it's crucial to remember that healthcare as a sector is becoming increasingly globalized. India plays a significant role in pharmaceutical manufacturing and research and development, so the companies within this fund aren't just operating in a vacuum, they're part of a global network.
So investing in this fund is kind of like tapping into a global trend,
Yeah.
but with a focused approach on India's unique strengths in the healthcare arena.
Precisely. It's about recognizing the interconnectedness of the global healthcare market while also capitalizing on the specific growth potential within India.
Makes sense.
Yeah.
Now, before we wrap up, I wanted to circle back to SOS Finwell. They've been incredibly generous with their insights, and their report was the springboard for this whole deep dive. What are some other ways our listeners can connect with them or tap into their expertise?
Well, first off, I highly recommend checking out their website. They have a wealth of information there, from articles and blog posts to webinars and even personalized financial planning services.
Wow.
They also have a really active social media presence, so be sure to give them a follow for regular updates and insights on all things investing.
Perfect. We'll make sure to include all those links in our show notes for easy access. Any final words of wisdom for our listeners who might be considering dipping their toes into the world of pharmaceutical investing in India?
Investing can feel like navigating uncharted territory, but remember, knowledge is power. Do your research, understand your risk tolerance, and don't be afraid to ask for help along the way. Whether you're a seasoned investor or just starting out, there's always something new to learn.
Wise words. And on that note, a huge thank you to SOS Finwell for their incredible report and for joining us on this deep dive. And to our listeners, thank you for tuning in. We hope you found this episode insightful and empowering. Until next time, happy investing. And a friendly reminder that mutual fund investments are subject to market risks. Read all scheme-related documents carefully. This is not financial advice. We're just two curious minds exploring the world of finance, one deep dive at a time.